with us now for more is John Beirne, the principal economist of the ADB based in Manila. Good to see you, John. Welcome to the program.
Good morning. How are you?
I'm good, thank you. So why did the ADB keep its forecast steady at 5.6, but revise down the forecast for 2026?
Well, our forecast for 2025 is at 5.6%, and this amounts to a downward reduction compared to what we had in April, which was at 6% for this year. For next year, we've also revised down our forecast to 5.7%, and this compares to what we had in April of 6.1%. So the big difference in relation to the period in April when we made our forecast then was, of course, we see a much more challenging external environment. Tariffs, of course, are having an impact on the outlook, as well as that trade uncertainty remains elevated, although it is below its peak, which we saw materializing in April. So really the downward revision for this year and next year is related to a more challenging external environment.
And include to that the government shutdown overnight in the U.S. How might that figure into your assessment going forward?
Well, certainly there may be some impacts on markets due to this. We have seen in the past when this shutdown has taken place that there has been some volatility in markets. In this scenario, we also see that, for example, there could be delays with the release of US data. But, overall, we would see that whilst there could be some volatility in markets, there could be some impact on the dollar. This really amounts to an additional layer of uncertainty. But, at this juncture, we do not see that it would have a longer-term impact based on what we have also seen in previous episodes of shutdowns.
Well, put in another additional layer of uncertainty locally. Your assessment comes after a full month of investigations into the anomalous government flood control projects, which raise political risk. In what way did the corruption allegations play into keeping the forecast where it is for 2025?
Well, I think there are several risk factors facing economies. In the case of the Philippines, I mentioned already the external risks on the trade side, which are obviously having an impact on the outlook. There are also domestic issues around corruption and scandals in this regard. And these can have impacts on sentiment, on investment. And I think really what we are seeing coming out of this is greater urgency on the need for reforms in this area, which can help to improve the effectiveness and efficiency of public spending, particularly in the case of infrastructure.
So what kind of reforms does ADB want to see?
Well, I think greater transparency would be an important factor which can contribute to an improved climate for investment more broadly. This can have spillover effects positively both on domestic investment, but also domestic coming in from abroad. So I think reforms around that area would be important, as well as reforms around easing doing business in the region, and also easing the extent to which investment can be made. All of these factors will help to boost the outlook for growth and offset some of the negative effects that we see coming from the external side, for example.
With respect to the corruption investigation, what would you be monitoring here from here on out, meriting a forecast revision?
Well, I think it's difficult to pin down a specific factor that we would look at in terms of how it would affect the outlook. I think key indicators that would be important to look at would include the extent to which it affects confidence, both on the consumer side and the investor side. So this can, of course, affect what would happen with regard to domestic demand going forward. But I think, it's something that we need to monitor closely in the near term.
What about concerns of multilateral lenders and the loans and where they're actually going when they lend to the Philippines? Is that a big concern? How does that pile up in the list of concerns about the Philippines?
Well, as I mentioned earlier, an important factor will be to enhance the area of transparency, and this can help to allay some of those concerns.
All right, the ADB's updated forecast come just 24 hours before the huge temblor in Cebu. And as we know, Cebu is a key manufacturing hub. So what impact do you think the quake's damages and disruption may have on your full forecast for this year?
Yeah, clearly this was a terrible event. And I think at this point, we are still trying to understand the scale of the damage. After we would take that into consideration, we will look at how it could impact upon how we see growth going forward.
And what appears now to be the bigger risk for this year's full-year GDP forecast, having discussed both external and internal? Is it what goes on in the U.S., or is it internal challenges on trust and perceptions of a lack of accountability?
Well, I think the main risks that we look at on the macro side are coming from what we see materializing on trade and the risks that the trade tariffs can have on the economy. So there are still uncertainties around what types of tariffs could be introduced. For example, there has been talk on sector-specific tariffs on semiconductors, for example, which would have an impact on the economy. There's also continued elevated levels of trade uncertainty, which I mentioned earlier, which can negatively affect investment in the economy and, by extension, affect the outlook.
If indeed that extends to service exports, like the call center business, would that be a bigger concern?
Well, of course, if tariffs would extend out to services, then this would be something that would need to be taken into consideration. Of course, when we look at the impact of tariffs, we're really trying to assess these on the basis of not only the level of the tariff, but also the extent of exposure to US demand. And this would be a key factor to be taken into account when we try to assess how they would likely affect the outlook for growth.
And a key factor would be the monetary policy lever. The governor himself, Eli Remolona, told me last week that a bigger rate cut may be necessary if there is a sharp slowdown in the GDP and output. We've seen the PMI for September, and it's fallen below 50, signaling contraction. Do you think these are fair metrics to warrant 50 basis points of cuts?
Well, I think should it be necessary, then I think the important factor is that inflation is very low in the case of the Philippines. It's way below target, and this provides additional space for monetary policy easing. So I think in order to strengthen domestic demand and also offset some of the effects that we see on the external side, monetary easing can be expected. The extent of the cut, of course, would depend on domestic factors.
All right, John, we got about 30 seconds here. Where do we sit in the ASEAN? Give us a bit of a bird's eye view.
Well, in terms of the growth outlook for the region as a whole, Southeast Asia, so this has come down somewhat compared to what we have forecast in April, essentially for the same reasons. There continues to be a challenging external environment. But what I would say is domestic demand has remained extremely resilient across the sub-region. And this is helping to offset some of these negative effects. As we touched upon the issue of monetary policy, this continues to have an important role to play in supporting domestic consumption, domestic investment across the region more generally. And this is related to the fact that inflation continues to come down. We are seeing global commodity prices easing somewhat, which is helping to contribute to that as well.
All right. Well, thank you so much for your insight, John. I much appreciate it. John Beirne of the ADB in Manila.